The Japanese yen stays soft in tight range after the Bank of Japan ended the policy meeting with an unanimous decision to leave interest rates and asset purchases unchanged. That followed expansion of the size of the asset buying program in September and October. The asset purchase size stayed at 66 trillion yen while the credit lending facility was maintained at 25 trillion. It's likely that further stimulus will be announced in December, at the meeting 4 days after the election on December 16. The next likely Prime Minister Liberal Democratic Party leader Abe, pushed for aggressive easing from the bank and triggered a steep sell-off in the yen last week, but the comment was also seen as positive by markets as seen in the rally in Nikkei. However, Abe pushed the rhetoric further and urged the bank to buy government bonds to finance public works and spending, receiving some negative reactions. Some critics said that would change the independence of the central bank and would lead to irresponsible The euro's recovery against the dollar continues, but strength is so far limited. Moody's downgraded France's sovereign credit rating by 1 notch from AAA to AA1. The rating agency cited deteriorating economic prospects due to subdued domestic and external demand and uncertainties in fiscal outlook as reasons for the downgrade. It also maintained negative outlook on the rating on structural challenges and a sustained loss of competitiveness. Nonetheless, Moody's still hailed France for having a strong commitment to structural reforms and fiscal consolidation. In response, French Finance Minister Moscovici said, French debt still remains among the most liquid and safest of the Eurozone, and the economy is large and diversified, and the government has shown proof of its serious plan to implement structural reforms and Eurozone finance ministers are meeting in Paris today to discuss the Greek fiscal issue ahead of the Troika meeting tomorrow. It's reported that lengthening maturities on Greek debt and lowering rates on the country's bailout loans are the main options being discussed. Ahead of the meeting, the Greek government approved laws to enforce automatic spending cuts or tax hike in case fiscal targets are missed out by more than 10% for 2 consecutive quarters. The policy is viewed as an appeasement of its creditors. Government spokesman Simos Kidakoglu said the move was aimed at fulfilling the final pledges to investors. Regarding the meeting today, German Finance Minister Wolfgang Schäuble does not expect any final decision to be made. However, there have been rumors that a tentative approval of €55 billion will be made, with the final approval on November and December. The pause the Reserve Bank of Australia policymakers made in November has greatly lifted the chance of a rate cut in December. In the minutes released for the meeting, the central bank viewed the current policy rate of 3.25% as appropriate but signaled room for further easing. As the Reserve Bank will hold no meeting in January and February, it is more likely for a rate cut next month than another pause until March. The bank staff downgraded GDP growth forecast for 2013 as mainly driven by a change in the profile of mining investment. On the data front, the Australian Conference Board leading indicator dropped 0.3% in September. Japan All-Industry Activity Index dropped 0.3% month-on-month in September. German PPI and Swiss trade balance will be released in the European session. U.S. housing starts and building permits will be the main feature in U.S. session.